let's also pull up Titan and see how things are faring there. Titan is under pressure this morning, and that is largely because of the possibility of the bottom line as well as its operational numbers missing out on street expectations. Well, we spoke to the management of Titan about the quarter gone by as well as what we can expect going forward. This is what they had to say. Listen in.
The quarter four and full year has been a satisfying performance for us. And on the growth front, we did pretty well in spite of several challenges during the entire year, and particularly in quarter four, gold price volatility created for us. But overall, satisfying quarter. Of course, the margin was a bit slower. But if you look at actually FY23, we always have been talking about we had some one-time gain. And for that, if you adjust about 30-40 basis point lower than the normal margin trajectory, and we have talked about competitive pressure and gold price volatility caused this because we have been prioritizing growth and customer acquisition and market share.
Understood, sir. And I think I just want to take the point forward that you said on gold price volatility. How has that affected your inventory currently? And was that one of the key reasons for the margin pressure in the jewelry business as well?
So when the gold prices are volatile and particularly a sudden spike or increase happens, of course, consumer sentiment weakens a bit, and people who can defer, who can wait for their purchase, they tend to do that. And once the prices settle down and people get used to new price levels, they come back. So quarter four had that phenomena happening. But eventually, it comes back, like it also kind of put the confidence back in a gold as a class of a store of value, where generally prices have been going up on the long term. And that brings back the store of value investment angle to the gold jewelry purchases as well. But yes, in the quarter, to kind of attract customers, many consumer offers and gold exchange program, etc., were promoted, and that has affected margin a bit.
And what is your general outlook for these gold prices? Because currently we haven't seen in the month of April as well, post quarter four as well, the prices haven't come down, and in fact they've also flattened and are expected to somehow go up as well. I know you can't speak on numbers per se, but how do you see the trend for gold prices going forward right now?
Very difficult to predict, and gold price gets governed by so many global factors, and one of the factors which affect gold also is the geopolitical issues, which are very, very unpredictable. Also, we believe central governments are also increasing their purchases as far as gold reserves are concerned. So gold is going to be a very stable and a strong asset class. Some corrections may happen because all of a sudden increase has gone up, but very, very difficult to predict.
Understood, sir. And I just want to talk a little bit about margins. You said that, in the conference call that roughly 12 to 13% margins should be maintained by the company over the next 12 to 18 months. Now, despite being a very, I wouldn't call it a shaky start of the year, but on basis of the gold price, which is a key raw material, being up, while there has also been a very increased competitive intensity for the first time in the last few years. How do you speak on margins, and if there's anything you want to add on competition as well, sir?
So, of course, the competitive intensity has gone up. The existing players are expanding pretty aggressively. Many new players are coming into the industry and sector. So retail capacity has gone up. I don't think demand has kept pace with that capacity addition. So competitive intensity is going to stay. And I think our margin for jewelry business, operating profit margin, will be more centered towards 12 than 13. That's the thing. But as always in the past also, we have said that while growth is a priority, but it is not at the cost of margin. We do take tactical calls to respond to competition. But it appears to me center of gravity for margin in jewelry business would be around 12%.
And how do you see the recovery? In order to overall maintain the margins at an overall consolidated level, if you are generally, because in the last quarter of the previous financial year, we saw the jewelry margins roughly at around 13%. This time it's around 12, and you're saying that going forward that would be at least for as we look today, the new level. Where do you see the recovery? Do you see other segments recovering, and which would be those according to you?
Yeah, so we have also talked about that other businesses like watches, wearable, eye care, and the newer segments where we are scaling up, they have high gross margin profile compared to jewelry business. And as their proportion goes up over 2-3 years, they can benefit few basis point margin uplift for the company level. And outside standalone business also, Carrot Lane and Teal are doing pretty well. And as they grow, their margin profile improves. Overall, company should get benefit, but it's not a major shift, because jewelry continues to be a dominant business as far as revenue and margin contribution is concerned. And there, I'm not seeing in next 12-18 months too much margin shift towards upward. But other businesses will contribute on the positive side.
I think for this quarter specifically, the watches margins were a bit affected. The watches as well as the wearable market coming in roughly 8.5% versus 11% previously. How do you see this market going forward? Because this segment has been a little tough to see growth per se for FY24, and this is not just for you specifically, for the industry as well, but you being the biggest player. How are you seeing this particular segment going forward for the financial year 25? Any on launches, anything on commentary that you can give us, sir?
So on FY24, overall watch business grew very healthy, roughly 18%. And wearable also grew in the same proportion, I would say. So premium watches, analog watches are doing well. Their margin profile is also doing well. There is some softness at the entry level, where Fast Track and Sonata analog watches operate. But on the Titan and the Helios and the premium watches within Titan, what we are doing, they are doing well, and their margin profile is intact. Wearable industry have gone through I would say, price downward spiral, which due to competitive pressure, due to inventory glut, which is continuing to have at this point of time, prices have gone down and margins have really come down very heavily. And that has affected overall watch business margin profile in Q4 for us. As far as we think that wearable business should able to correct its inventory situation, other players, in next 2 quarters, and the third quarter, which is generally festive season for India, again, wearable should also start improving its margin profile. Overall, we believe for our watch division, we don't see any further margin drop. It should start inching up from there and again going towards 12% in FY25. That's our expectation at this point of time.
Understood, sir. And just to spend a little bit more time on Carrot Lane, I think the numbers have been really strong, and over the last 12 to 18 months, you have been updating your shareholders on its progress as well. Currently, roughly around 7% is the EBIT margins for the business, as well as, on the storefront as well. It's pretty strong, coming at roughly 270 stores. If I just have to take a longer term view over the next couple of years, how do you see this business panning out on the storefront? On the revenue contribution to the overall business as well as on margins, because this is one of the key growth segments which has been for the company. So just if you could update us on that, sir.
So Carrot Lane is doing well. We believe next few years, they grew 34% in FY24, and that kind of growth trajectory should be there, while scale is now going up, so it becomes an increasingly difficult task to keep delivering that kind of growth number. But 30% plus kind of growth rate, definitely I expect next 2 3 years to happen. And with that, margin profile should also from 7% to 8-9% operating profit should also progress. This year particularly, again, they also got impacted with the competitive pressure, and that is where, and they have set up some of the expansion plans and growth plan and created some of the fixed cost base accordingly. And actually, that kind of growth didn't materialize, and that is where margins were not as per the plan and expectation. But they have capacity and potential to keep improving their EBIT margin and continue to grow 30% plus growth rate in coming years.